Let us see the question. Consider the balance sheet of Maya Limited as on 31st of December 2020. The company has received large order and the company anticipates the need to go to its bank to increase its borrowing. As a result, it has to forecast its cash requirement for January, February, and March 2021. Typically, the company collects 20% of the sales in the month of sales, 70% in the subsequent month, and 10% in the second month after the sales. It has been given that all sales are credit sales. So they have provided to us the balance sheet of Messrs. Maya Limited over here. Equity and liabilities. In that equity share capital, it is an amount of 1 lakh because the figures are in thousand term. The reserves and surplus 14 lakh 39,000. Long term borrowing is 4 lakh 50,000. Accounts payable, in simple language, we understand that the accounts payable is creditors. Loan from bank, an amount of 4 lakhs. Other liabilities 2 lakh 12,000. On the asset side, net fixed asset 18 lakh 36,000. Stock 5 lakh 45,000. Accounts receivable, in a simple language, it is the debtors. 5 lakh 30,000. Cash and bank 50,000. Purchase of the raw material are made in the month prior to the sales and amount to 60% of the sales. Payment for these purchases occur in the month after the purchase. Labor costs including overtime are expected to be 1 lakh 50,000 in January, 2 lakhs in February, and 1 lakh 60,000 in March. Selling, administrative tax and other cash expenses are expected to be 1 lakh rupee per month for, highlight the portion, January through March, means January, February and March. Actual sales in November and December. Projected sales for January through April are as follows, and again the figures are in thousand. So we have been provided that the sales of the November 5 lakhs, December 6 lakhs, January 6 lakhs, February 10 lakhs and so on. On the basis of the information, prepare a cash budget and determine, highlight the portion, amount of the additional bank borrowing necessary to maintain a cash balance of 50,000 at all times for the month of January, February and March. B part of the question says that prepare a pro forma balance sheet for 31st of March. I request all of you to go through the question, please. I request you to only go through the question, do not calculate any answer. Dear students, gradually we are discussing how to calculate the answer. However, I want you to tell me in the chat box that what amount is paid for purchase of raw material in February. I repeat my question. My question is, what amount is paid for purchase of raw material in the month of February? Please give answer in the chat box. Friends, I am going to give explanation to you in two parts. I'll give you explanation one, let's say when do we have purchase, and second, when do we pay for the purchases. Okay. The question is providing the information like this. Purchase of the raw material are made in the month prior to the sales and amount to 60% of the sales. I am reading only this much. I am reading the part to the extent, say when purchases are made. Students are requested to pay attention. You do not have to write anything. Heading of this working note will be calculation of purchase of raw material and payment for purchase of raw material on monthly basis. I request all of you to pay attention. Do not write anything. Let me explain to you. Column number 1 is month. In that I am starting with the calculation from the November month. You may have a point that sir, we have to prepare the cash budget only for 3 months, January, February and March. Then why do we prepare the working note starting from November? See what happens at say certain information before January would be relevant and after March would also be relevant. That is the reasons I am preparing say from the beginning. November, December, January, February, March and April. Column, that is column number 2, I am writing sales. I am writing the sales figure or all the figures in thousand term. So November sales 500, December it is 600, January 600, February 1000, March 650, in April 650, 750. Then I am preparing a column 60% of the sales. Why? I just explained that to you. So basically we understand 500 into 0.6, that is 300. 600 into 0.6, that is 360. Again 360. 600, that is 1000 into 0.6. 650 into 0.6, that is 390, and 7650 into 0.6, that comes to 450. That is the way say 60% of the sales is calculated. Now friends, I am writing that purchase. Read language of the question. Purchase of the raw material are made. Highlight the portion in the month prior to the sales and amount to 60% of the sales. So what happens? Let's say we purchase with some planning. We purchase in the month prior to the sales. Means we understand that say in the month of November we purchase equal to the requirement of December. So we purchase in the month of November 360. In the month of December we purchase for the requirement of January. In January we purchase equal to the requirement of February, and so on. We will be having purchase in the preceding month. So this is the way the purchases can be calculated 1 month before. Okay. Now after writing the purchase, let us understand and say what about the payment information is given. The question provides that payments for these purchases occur in the month after the purchase. In a simple language, average payment period is 1 month. So I'm writing over here, say the payment. Whatever you purchase in the month of November For that you pay in the month of December. But I am not concerned with the December payment. Whatever you purchase in the month of December, that you pay in the month of January, that is 360. Whatever you purchase in the month of January, that you will pay in the month of February, that is 600. And whatever you purchase in the month of February, that you pay in the month of March, that is 390. Whatever you purchase in the month of March, that you will pay in the month of April. However, we are not concerned that what is the amount to be paid in the month of April. Any receipt of the payment before January is to be ignored. Any receipt of payment after March is to be ignored. This is the way we are supposed to calculate the payment for purchase of the raw material from January to March. Please write down answer. So write down answer the question. It has been given that 60% of the sales is purchased in preceding month, comma, it is paid with average payment period of 1 month. Full stop. So write down further answer. Preparation of monthly cash budget from January to March. So we are going to prepare the monthly cash budget for the 3 months, January, February, March. So column number 1 is particulars. Opposite to that, we'll have the month. In that, January month, February month, and March month. Now, friends, we are going to prepare the monthly cash budget starting from January to March. In that, so we'll start with the opening cash balance. I want any of you to tell me in the chat box what is the opening cash balance. So over here, the opening cash balance is provided to us in the example as 50,000. Because the balance sheet is provided to us, say as on 31st of December. So the opening cash balance is what we understand is 50,000. So here we start with the opening cash balance, that is 50,000. Okay. Next is what we can understand is the collection of the sales. You can see that the question is providing. Now I want everybody of you to pay attention, don't write anything. Typically the company collects 20% of the sales in the month of sales, 70% in the subsequent month, and 10% in the second month after the sales. So we have been provided with the information that the collection of the sales is divided into 3 parts. So collection of the sales 20%, 70%, and 10%. Like that information is given to us. I request all of you to pay attention, do not write anything. We have been provided with the information that the sales for the month of January is 600. January sales is provided to us 600. So what will happen? 20% of the 600 will be collected in the month of January. 70% of 600 will be collected in the month of February. And 10% of 600 will be collected in the month of March. So what will happen? It is 120, it is 420, and it is 60. That is the way. So we are going to have the collection into 3 months like this. Do not write anything. Let me give explanation to you further. Sales for the month of February is provided to us in example. It is 1000. So what will happen? It is 1000 into 0.2. It will be collected in the same month. 1000 into 70%. It will be collected in the month of March. So it is 200 and it is 700. Remaining is collected in the month of April and we are not concerned with that. Next, information is given that March month sales is 650. So 20% of that would be collected in the same month, that is 130. Remaining is collected in April and May and we are not concerned. Before January, it is the December month. Sales of the December is given to us as 600. We understand that this is the sales of December. We understand that say 20% of that would be collected in the month of December. Then 70% would be collected in January. So what will happen? It is 600 into 0.7. That is 420. And 10% is collected in February. So 600 into 0.10, that is 60. Before December, it is the November month. Sales of November is 500. 10% of 500 is collected in November. 70% of 500 is collected in December. And its effect must be incorporated in this 50. Remaining 10% will be collected in the month of January. That comes to 5050. This is the way we are required to write the collection of the sales. Please write down this answer and then we are proceeding further. After writing the collection, the remaining answer is extremely simple. We'll mention the payment to creditors, basically for purchase of the raw material. For January it is 360, February it is 600, and for March it is 390. So over here it is 360, then it is 600, and then it is 390. Next is payment. The question is providing the information that labor cost including overtime, that information is given to us. So we are writing over here payment of labor cost. In the month of January it is 150. In February it is 200. And in March it is 160. That is the payment for the labor. Next is information is given about the selling and administration and tax and other cash expenses. 1 lakh rupee per month. So we understand that the selling, comma administration, comma tax and other cash expenses. Every month it is 1 lakh. So it is 100, 100 and 100. This is the way we will be having say all the payments. Opening balance plus received minor payment. That is the closing balance before borrowing slash repayment adjustment. That is the way we are required to compute the closing balance before borrowing slash repayment adjustment. 5050 plus 120 plus 420 plus 50 minus 360 minus 150 minus 100. So the closing balance is 30. The closing balance of 30 is less than 50,000 rupees. The question is providing the information like this. You are required to prepare the cash budget and determine amount of additional bank borrowing necessary to maintain a cash balance of 50,000 at all times. We understand that the 30,000 rupees is less than 50,000. So we have to borrow. There is no repayment right now. This is the revised closing balance. That is 50,000 rupees. So what amount we will borrow? 20,000. That is found as balancing figure like this. The revised closing balance of 50,000 will be carried forwarded in the subsequent month as the opening balance. That is over here 5050. Accordingly, we will prepare for February and March. I request you to complete the answer for February and March and put your answer in the chat box. I want you to write answer in the chat box that in February how much we will borrow or repay, and in March how much we will borrow slash repay. Write down that answer. So friends, now we will make the calculation for February. In that 5050 plus 200 plus 420 plus 60 minus 600 minus 200 minus 100. So the answer comes to negative 170. Yes. Negative 170 is indicating that there is a shortfall. Yes. So what we have to do, we are required to borrow in order to cover the shortfall of 170 and to keep a balance of 50. So we will borrow 220. This is the closing balance for the month of February, which is opening for the month of March. So what will happen in the month of March? Opening is 50 plus 170 plus 700 plus 60 minus 390 minus 160 minus 100. So the closing balance is 290, which is more than 50. So there will be a repayment. Repayment of how much? 240. That is again found as balancing figure. So coincidentally it happened like this, coincidentally, that whatever amount that we had borrowed itself is a repayment of the loan. That is what we understand. I request all of you to write an answer for the remaining portion of the cash budget. Now the question says that so you are required to prepare pro forma balance sheet for 31st of March. So let us have a discussion, say for preparation of the projected balance sheet for 31st of March. Friends, we know that say when I speak the balance sheet, then in that case it is basically, let's say, accounts comes in our mind. So of course we are required to prepare this say based on the accounts. I request all of you to pay attention to understand that say how we are required to say calculate the answer. All students are requested to pay attention over here. This is the opening balance that is the opening balance sheet that we have. In the closing balance sheet, the equity share capital will be as it is 100, no change, because there is no issue of the new equity share capital. There is no buyback. This is the opening balance of the reserves and surplus. During these 3 months, if at all there is a profit, we will add. If at all there is a loss, then we will deduct. So we have to prepare a working note for profit or loss for this 3 months period. Long term borrowing, there is no change. Accounts payable, in that say this is what we understand is the opening accounts payable means creditors. We understand that say whatever is the opening accounts received that is payable, that is paid in the month of January. Whatever the purchases of the January is paid in February. Purchase of the February is paid in March. Purchase of March would not have been paid by 31st of March. And we understand that the term accounts payable stands for creditors. So this is the amount of the creditors which is outstanding as on 31st of March. That is what we understand. That is say 390 in this example. This is paid and the creditors as on 31st of March would be equal to purchase of the March, that is 3,90,000, because average payment period is 1 month. Loan from bank, opening is 400 plus 20 plus 220 minus 240. So coincidentally, the opening and closing are same. However, it will not happen every time. So just this time it is happening coincidentally. Now there are two things that I want to tell you. One thing that I want to tell you is that sometimes students are having a question that, sir, if at all this closing balance is more than 50, then what we will do? We will make the repayment of the existing loan. If at all this balance is greater than 290, for example, then again we are required to make the payment of the repayment of the loan more than 240. Means the existing loan will be repaid and we would be having the closing balance of 50 only. That is the first point that I want to tell you. Second point, listen me carefully. In respect of the long-term borrowing and in respect of the loan from bank, the question is lacking with the information about the rate of interest. Question is lacking with the information about the rate of interest. So what happens, I'd say, we are required to ignore the interest calculation. Otherwise, we would have calculated the interest amount at least for the purpose of calculation of the correct profit loss, and it would be shown as the liability on 31st of March. Remember that say if we are not paying interest, it will not be reflected in the cash budget. But since accounts is prepared based on the accrual principle, so any interest which is provided to us will be considered for the purpose of making calculation or for the purpose of preparing the balance sheet. Other liabilities, no change, because no information is given that say we are going to pay. So this is going to remain same. Net fixed asset, no change, 18,36,000. Information about the depreciation is not given. Dear students, if the depreciation information is provided to us, then definitely in the first part of the question, we will ignore it. Why? Because depreciation is a non-cash item, but not in the second one. Why? Because the second question is, say, from the accounts point of view. And accounts does not differentiate cash expenses and non-cash expenses. So we have to take into account the depreciation in calculation of the second part of the question answer. Inventory means stock. This is the opening stock. We have to prepare the working note for calculating the closing stock. This is the opening accounts receivable means debtors. We have to prepare the working note for closing accounts receivable. Cash balance opening is 50,000. We understand that so the closing is also 50,000. So this 50,000 will be considered for the purpose of preparation of the balance sheet. So in short, there are three working notes that we need to prepare. One is the debtors, second is the stock, third is the profit loss, and then we'll prepare a small balance sheet. So I request all of you to write an answer. Answer for the B part of the question. Preparation of pro forma balance sheet on 31st of March. In the write down, working note number 1, calculation of debtors on 31st of March. I request you to tell me what would be the debtors as on 31st of March. Please put your answer in the chat box. Let us have understanding how to calculate the answer. Closing balance is equal to opening balance plus credit sales minus collection. Opening balance is given to us in the question as 530 plus sales. Sales is provided to us for the 3 months January, February and March. It is 600,000 and 650. So 600 plus 1000 plus 650 minus collection during these 3 months. Now what is the collection? Let us see. The collection during the month of January is total of this 3. In the month of February, it is again total of this 3. And in the month of March, it is again total of this 3. That is the way we will have the collection during these 3 months. So January month collection, in that it is 120 plus 420 plus 50. February month collection, 200, 420 and 60. And March month collection, it is 130, 700 and 60. So what will happen? It is 530 plus 600 plus 1000 plus 650. That is 2250 minus 120 plus 420 plus 15. That is 590. 200 plus 420 plus 60. That is 680. 130 plus 700 plus 60. That is 890. So what will happen? 530 plus 2250 minus 590, 680 and 890. Closing would be 620. That is the way simply we can calculate the closing balance. Opening balance plus collect, that is the sales minus closing balance. This is a very simple method by which we can do answer. Or otherwise, we can do this answer in an alternative method. What is that? Let us discuss. Column number 1 is month. Column number 2 is sales. Column number 3 is outstanding percentage. And last column is outstanding in terms of the amount. See, information is provided to us. Sales of January month is 600. Sales of February month is 1000. Sales of March is 650. What is the collection? Collection is 20, 70 and 10. That is the collection that we have. So whatever the January month sales, 20% is collected in January, 70% is collected in February, and 10% is collected in March. So nothing is outstanding as on 31st of March. Sales of February, 10% is collected in February. I'm sorry, 20% is collected in February, 70% is collected in March. So 10% would be outstanding as on 31st of March. 20% is collected over here. So 80% is outstanding. So what will happen over here? We understand that it is 1000 into 10 percentage. That is what say the amount outstanding at the end of the March. And 650 into zero point 0.8. So 520 is outstanding say as on 31st of March. Total outstanding would be 620. Because basically the data means the amount of the credit sales not collected at a particular point of time. Please write down answer. So that is the way the data can be calculated by either of the working. My suggestion is to do this method. The reason behind that is say that is quite simple for anybody to apply. Working note number 2. Calculation of closing stock as on 31st of March. So let us have understanding that say how to compute the closing stock as on 31st of March. Dear students, over here a simple assumption is made over here like this. The purchase of the raw material are made in the month prior to the sales and amount to 60% of the sales. So simple assumption is made that whatever this say the raw material which we purchase in the preceding month is basically the raw material consumption. We are going to purchase raw material to that extent, like in the like producing and selling the goods. That is the kind of assumption is made. I repeat my explanation. An assumption is made that say we purchase raw material equal to 60% of the sales of the subsequent month. Why? Because we are going to use that much raw material for producing the goods. So we will be having so the consumption in the month of November 360, consumption in the month of December 360, consumption in the month of January 600, and so on. So that is the consumption that we have. This is what a small assumption that we have for the purpose of doing answer. Otherwise, it is not possible to calculate the closing inventory as on 31st of March. So let us answer the question. We assume that raw material is purchased, comma, equal to 60% of subsequent month sales because consumption of raw material equals to 60% of sales of subsequent month. So we understand that so the consumption of the raw material is equal to 60% of the sales. So friends, for the purpose of calculation of the closing stock, opening stock will be 545. Then purchase of January will be taken as 600. February will be taken as 390. March will be taken as 450. This is the purchase minus consumption. Consumption will be 360 in January, 600 in February, and 390 in March. That is the consumption that we will have. So closing stock equals to opening stock plus purchase minus consumption. Opening stock is 545 plus purchase. Purchase for the month of January is 600. For the month of February it is 390. And for the month of March it is 450. Minus consumption. Consumption of January is 360. February is 600. And March is 390. So 545 plus 600 plus 390 plus 450. So 1440. 360 plus 600 plus 390. That is minus 1350. The closing stock is 635. This is the way the closing stock is calculated as on 31st of March. Friends, sometimes I come across to a question like this, that sir, we always have a purchases equal to the requirement of the next month. So basically on 31st of March, the closing stock should be 450. But the calculation that we have made, in that it is 635. So why these two figures do not match? That is the kind of question to which I come across number of times. I give reply to that question. See, basically what happens at in the month of January, you can see that say the requirement of the raw material is 360. But instead of 360, we have stock of 545. So use your calculator. 545 minus 360. We are having excess stock of 185. So whatever the excess stock that we have of this 185, that 185 added to 450, you get the closing stock of 635. So we understand that say the excess stock as on 1st of January is carry forwarded and say it is reflected even in the closing stock over here. That is the first explanation. And the second explanation is this. Listen carefully. That basically what happens at say on one fine day, the company made a decision that every month we will purchase equal to the next month requirement. We will purchase equal to the next month requirement. But whenever the point at which we took that decision, we must be having say some excess stock, and that excess stock keep on carry forwarding. That is the reason. So the opening stock on 1st of January is more than the requirement of the January month. Otherwise, in case of the creditors, you can see. Whatever the purchases of the December, which is equal to the requirement of January, that purchase itself is reflected in form of creditors as on 31st of December. Purchases of the December is going to be paid in the month of January, and purchase of the December is reflected as the creditors as on 31st of December. Like that we understand. Working note number 3. Calculation of profit or loss starting from 1st of January to 31st of March. So during this 3 months, what is the profit or loss is supposed to be found. Only in that case we can prepare the balance sheet. Kindly prepare this working note, profit or loss calculation during this 3 months, and put your answer in the chat box. So friends, for the purpose of the preparation of the profit and loss, simply we will have, I request you to write down answer along with me. On the credit side, by sales. Sales of the January month is 600, February month is 1000, and March month is 650. So the credit side total, sorry, sales total is 2250. Closing stock. We understand that so the closing stock is 635. Again on the credit side. Okay. Debit side we will have the opening stock, which is 545. Then debit side we will have purchase. Purchases in total 1440. That is 600 plus 390 plus 450. Then we are having say the two expenses. So two labor, it is 150 for January, 200 in February, and 160 in March. That comes to 510. Next is two selling expenses. 100 rupees per month, that is 1 lakh rather, that comes to 3 lakhs. Credit side total 2250 plus 635, so it is 2885. Debit side same 2885 minus 545 minus 1440 minus 510 minus 300. So that is a profit of 90. If at all you keep the opening balance of the P&L account on the credit side, that is also acceptable. In that case, you will have the opening balance of 1439. In that, so the profit of 90 would be added to compute the closing balance. So I request all of you to write down answer for P&L and then try to complete the balance sheet on your own and put the balance sheet total in the chat box. So I request all of you to write down answer along with me. Projected balance sheet of Messrs. Maya Limited as on 31st of March. On the liability side, it is equity and liabilities. On the asset side, it is assets. Equity share capital 100, there is no change. Retained earning, You may write it as a reserves and surplus or P&L account. Opening balance is 1439. That is a profit of 90. So it is 1529. Next is long term borrowing. There is no change, 450. Next is the creditors. In that we have understood logically, it is 450. That is purchase for the month of March. So purchase for the month of March, it is 450. So here we are writing March. Next is loan from bank. In that opening is 400. Borrowing for the month of January it is 20. February it is 220. And March repayment is 240. So the closing balance would be 400. Opening and closing become same. Other liabilities, that is 212. This is the way we will have the liability side of the balance sheet. So it is 100 plus 1529, 450, 450, 400 and 212. That is 3141. Next is a fixed asset. In that it is 1836. Next is stock inventory. It is 635. That is a closing one. For that, say you have to refer the working note. That is working note number 2. In that, say the closing stock is calculated. Next is debtors. 620. Refer working note number 1. Cash balance. For that, refer the first part of the question, that is 50. 1836 plus 635 plus 620 plus 50. That is the way it comes to once again 3141. This is the way we are required to prepare the balance sheet of Messrs. Maya Limited on 31st of March. There are few important points that I want to dictate to you. Note only for understanding purpose. First, information about depreciation would have been taken into account in second part of the question, comma, not in first part of question. Because depreciation is a non-cash expense, so when we prepare the balance sheet, it will be considered. If rate of interest would have been given, comma, it would be considered in Second part of question, because outstanding interest would be shown in balance sheet. Full stop. Third point, closing raw material stock on 31st of March is more than purchase of March, because opening raw material stock on 1st of January is more than requirement of January month. In bracket I am writing 545 greater than 360. Let us have a small summary of the entire answer. In the first part of the question, we have to prepare the cash budget, and we have to make sure that say the closing cash balance is an amount of 50,000 every time. First working note, which I think is very important, purchase of the raw material and payment for purchase of raw material. Based on the sales, 60% of the sales is calculated, and this amount is the purchase in the preceding month. Purchase of each month is paid in the subsequent month. That is the way we are required to show the payment. Then preparation of the cash budget on monthly basis, in that opening cash balance on 1st of January is given. Collection is provided to us in 3 installments, 20, 70 and 10. Payment to creditors as per the working note that we have prepared. Payment for the labor cost, selling, administration, tax and other cash expenses. The closing balance before the borrowing / repayment adjustment. This balance is less than 15, so we'll borrow 20. Next month balance is 170 negative, so we borrow 220, and so on. We will be having the cash budget to be prepared. In B part of the question, we have to prepare the projected balance sheet. In that, the first simple working note is the debtors. Opening balance plus credit sales minus collection. Friends, only for your understanding purpose, I am showing one thing to you. You can see that the collection in the month of January of this 420, in February this is 60, and again in the month of January this 50. This is indicating the collection in respect of the sales before January month. So use a calculator, 420 plus 60 plus 50. That comes to exactly 530. So whatever the sales that we have before the January month is collected like this in January and February. So this credit sales which remains outstanding on 1st of January has been collected in January and February. Credit sales is given and collection is deducted. This answer can be calculated with an alternative simple method, wherein the outstanding percentage is multiplied with the respective month sales. Closing stock as on 31st of March. Again, in my opinion, this is an important working, because an assumption is made that the purchase is equal to consumption is equal to 60% of the sales, which is purchased in the preceding month. Profit loss calculation is simple, not something great. Then preparation of the projected balance sheet. Number of times the students are having a question to ask me that, sir, is it required to prepare the working note for the profit or loss? Because can I calculate this as the balancing figure? And can I do answer? My suggestion is no. Students have a point that say, can I write this as balancing figure? My suggestion is no, because of the two reasons. The first reason is, let's say it may happen, let's say you commit mistake over here, or you commit mistake over here. Then in that case, keeping this as balancing figure, your balance sheet is tallied, but your answer would be wrong. And second reason is, generally, whenever possible, we have to support our answer with the working notes. That is what always say the expected by the examiners. That is the reasons I do not suggest you to keep that as balancing figure. And of course, 2 or 3 important points which I have dictated last to you. Depreciation is non-cash item, but it would be relevant in the second part of the question. Outstanding interest would be once again relevant in the second part of the question, not in the first part. And closing stock of raw material is more than the purchase of the raw material in the month of March. The simple reason behind that is, on 1st of January, opening stock is more than the requirement for the month of January.